Hello everyone, I am Anantaraju, Assistant Professor of Commerce, Government First Grade College for Women, Pavagada. Dear viewers, first I would like to welcome all of you to the DCE Digital Learning Platform. In this session, we are going to solve a problem with regard to the joint venture transactions. As we have already solved two problems under the method when each co-venturer keep record of all transactions. In this session, we are going to solve the problem with regard to the when each co-venturer keep record of transactions only with regard to him. That means when each co-venturer keep record of his transactions only. So as you know, when co-venturer maintain separate set of books, so this method is not covered in the Tumkur University syllabus. And then the another method when each co-venturer don't maintain separate set of books for recording the joint venture transactions. In that method again two possibilities are there. When each co-venturer keep record of all transactions, and then another one is when each co-venturer keep record of his own transactions only. With regard to the when each co-venturer keep record of all transactions, we have already solved two problems. In this session, let us solve the another method, that is when each co-venturer keep record of his own transactions only. So let us have a glance at the problem. A and B were partners in a joint venture, sharing profits and losses in the proportion of 4/5 and 1/5 respectively. In the sense, 4:5. The profit and loss sharing ratio is 4:5. A and B were the co-venturers in a joint venture. Co-venturer A supplies goods to the value of rupees 5,000 and incurred expenses amounting to rupees 400. Co-venturer A supply goods to the value of rupees 5,000 to the joint venture and incurred expenses amounting to rupees 400. Co-venturer B supplied goods worth rupees 4,000 to the joint venture and expenses incurred by him amounted to rupees 300. So A supplied goods worth rupees 5,000 and incurred expenses 400, total 5,400. And then co-venturer B supply goods to the joint venture worth rupees 4,000 and incur joint venture expenses for rupees 300, total 4,300. And then B sells goods on behalf of the joint venture and realized rupees 12,000. Here sales proceeds are received by co-venturer B worth rupees 12,000. And also the co-venturer B is entitled to get a commission of rupees 5% on sales made by him. Here total sales is 12,000. 5% sales amounted to rupees 600 rupees commission. And then B settles his account by bank draft. That means the settlement has been made in between the B and A by a bank draft. Then here students are required to pass the journal entries and prepare the ledger accounts in the books of co-venturer A, assuming that co-venturer A keep record of his own transactions only. As you know, under this method we have to prepare two ledger accounts. One is joint venture with other co-venturer account and another is memorandum joint venture account. So joint venture with other co-venturer account, here that means the entries are the joint venture account. That means if A and B are the joint ventures, then A has to prepare in the books joint venture with B's account, and in the books B it will be termed as joint venture with A account. So here the joint venture transactions affected by the co-venturer in whose books we are going to record the joint venture transactions only should be recorded, and the transactions affected by other co-venturers should not be recorded in his books. But The joint venture here, the joint venture with other co-venture account is in the nature of personal account, and it does not show the profit or loss on account of joint venture. Hence, we have to prepare the memorandum joint venture account. So here, memorandum joint venture account is prepared to ascertain the profit or loss of the joint venture. Memorandum joint venture account is prepared on the basis of own transactions and also the transactions, that means as per the statement given by the other co-venturers, the transactions will be recorded as per the statement given by the other co-venturers. With the help of the statement given by the other co-venturers and also our own transactions, so we record the accounting entries in our books. Here, memorandum joint venture account is called in that name because memorandum joint venture account is prepared not with the help of the ledger balances, but with the help of the statement given by the other co-venturers. So it is called as memorandum joint venture account. Okay, as you know, under the memorandum joint venture account method, ಅಥವಾ when the co-venturer keep record of his own transactions only, here the transactions affected by the co-venture in whose books of accounts the recording account recording of joint venture transactions is being made, his transactions only recorded and the transactions affected by the other co-venturers will not be recorded. So here, as we look into the problem, so here joint venture account, A and B were partners in a joint venture account. So in the books of A, we have to pass the journal entries and prepare the ledger accounts. So here A supplied goods to the value of rupees 5,000 and incurred expenses amounted to rupees 400. This journal entry will be recorded in the books of A, and B supplied goods to the value of rupees 4,000 and his expenses amounted to rupees 300. This transactions will not be passed. So journal entry will not be passed for this transaction. And also B sells goods on behalf of the joint venture and realized rupees 12,000. This journal entries also will not be passed. For this transaction also journal entry will not be passed, but these transactions will be affected in the memorandum joint venture account. That's all. And then B is entitled to get a commission of 5% on sales. So for these transactions also, we need not to pass the journal entry because this is related to these three entries. B supplied goods to the value of rupees 4,000 and incurred expense amount to rupees 300. And B sells goods on behalf of the joint venture and realizes rupees 12,000. And then B is entitled to commission rupees 5% on sales. These three entries should not be recorded in the books of A in the joint venture account, but it should be mentioned in the memorandum joint venture account for the purpose of ascertaining the profit or loss. And then B settles his account by bank draft. So here we have to pass the journal entries. So with regard to the transactions affected by A, joint venture with B's account at R to purchase account because A supplied the goods to the joint venture worth rupees 5,000. Hence the joint venture account should be debited. Joint venture with B's account, it should be termed as joint venture with B's account, like that. Joint venture with B's account at R to purchases account. Here purchase account is credited because it reduces the stock of the goods in our own business, that is in business of A. So joint venture with B's account at R to purchase account being goods supplied to joint venture. And then second journal entry will be 400 rupees expenses incurred by A. So in his books the entry will be joint venture with B's account at R, joint venture with B's account at R to cash. Joint venture with B's account at R to cash because he incurred the expenses of rupees 400. So being materials purchased by B. Joint venture with B's account at R to cash or bank account. And then next journal entry will be joint venture with B's account at R to profit and loss account. This entry for the purpose of recording the joint venture profit, own share of joint venture profit. How does it arrive? 1,360 rupees. Okay, let us have a glance at this. So look at the joint venture with B's account. Here, to purchases account 5,000 is recorded. Okay, to cash account 400 is recorded for expenses. So here, the profit and loss, how does it arrive? How does it arrive? Here, the profit is, as I already told, the joint venture with this account, it is personal account in nature. It is not possible to ascertain the profit or loss in the joint venture with this account. So we have to maintain another account, that is memorandum joint venture account. This account is prepared to ascertain the profit or loss on joint venture. So look at the memorandum joint venture account. Here memorandum joint venture account is debited. It is roughly, that means roughly prepared. So own transactions and also the transactions affected by other co-venturers as per the statements given by the other co-venturers are recorded. Here to A's account. A's account is debited because material supplied by A worth rupees 5,000 and also expenses incurred by A 400 rupees. To A's account, materials 5,000, expenses incurred 400. So in the same sense, to B's account here, material supplied by B 4,000 rupees and expenses incurred by B 300 rupees. Total 5,400 in case of A and in case of B 4,300 on account of joint venture. And then to B's account here, the commission, B is entitled to get a commission of rupees 600. That is commission at 5% on sales made by him. Here sales made by him B by B's account on the credit side. So look at the credit side of the memorandum joint venture account by B's account. So here we have to mention rupees 12,000 because sales proceeds are received. Sales proceeds received by co-venturer B, 12,000 rupees. For that is 5% on 12,000 rupees. The commission will be rupees 600. So to B's account commission rupees 600, and after that 12,000 memorandum joint venture account shows 12,000 rupees on the credit side, and then here 5,400 plus 4,300 and then 600, total 10,300. So I'll get total 10,300 stands on the debit side of the memorandum joint venture account. So 12,000 minus 10,300, total 1,700 profit on account of joint venture. Profit from the joint venture is 1,700 rupees. This 1,700 rupees should be appropriated in between the A and B in the ratio of 4:1, 4/5 and 1/5. So this amount, the profit to A will be 1,360 and for B rupees 340. So memorandum ಜಾಯಿಂಟ್ ವೆಂಚರ್ ಅಕೌಂಟಿಂದ ನಮಗೆ ಪ್ರಾಫಿಟ್ ಎಗೆ ಎಷ್ಟು ಹೋಗುತ್ತೆ ಅನ್ನೋದು ಗೊತ್ತಾಗಿದೆ. ಸೊ ಅವಾಗ ನಾವು ಜಾಯಿಂಟ್ ವೆಂಚರ್ ಇಲ್ಲಿ ಜರ್ನಲ್ ಎಂಟ್ರೀಸನ್ನು ಇದೇ ತಗೋಬೇಕು. ಓನ್ ಶೇರ್ ಆಫ್ ಪ್ರಾಫಿಟ್ ಮಾತ್ರ ಇಲ್ಲಿ ತಗೊತಾ ಇದ್ವಿ. ಸೊ ಜಾಯಿಂಟ್ ವೆಂಚರ್ ವಿತ್ ಬಿಸ್ ಅಕೌಂಟ್ ಎಟಾರ್ ಟು ಪ್ರಾಫಿಟ್ ಅಂಡ್ ಲಾಸ್ ಅಕೌಂಟ್. ಇಲ್ಲಿ 1,360 ಹೇಗೆ ಬಂತು ಅನ್ನೋದನ್ನ ವಿತ್ ದ ಹೆಲ್ಪ್ ಆಫ್ ದ memorandum ಜಾಯಿಂಟ್ ವೆಂಚರ್ ಅಕೌಂಟ್ ವಿ ನೋ ದ ಪ್ರಾಫಿಟ್ ಆಫ್ ಎ ಈಸ್ 1,360. There is joint venture with B's account etat to profit and loss account 1,360 being own share of profit. And after this, bank account etat to joint venture account, that is the settlement is made through the bank draft. ಸೊ ಎಷ್ಟು ಅಲ್ಲಿಗೆ ಬಿ ಕೊಡಬೇಕಾಗುತ್ತೆ ಅಂತಂದರೆ ಇಲ್ಲಿ ಜಾಯಿಂಟ್ ವೆಂಚರ್ ನೋಡಿದ್ರೆ ಸಾಕು, 3 ಎಂಟ್ರೀಸ್ ಇದೆಯಲ್ಲ, ಜಾಯಿಂಟ್ ವೆಂಚರ್ ಎಷ್ಟು ಸರಿ ಡೆಬಿಟ್ ಆಗಿದೆ ಅನ್ನೋದನ್ನು ನಾವು ನೋಡಿದ್ರೆ ಜಾಯಿಂಟ್ ವೆಂಚರ್ ವಿತ್ ಬೀಸ್ ಅಕೌಂಟ್ 5,000. ಸೊ ಅಗೈನ್ ಜಾಯಿಂಟ್ ವೆಂಚರ್ ವಿತ್ ಬೀಸ್ ಅಕೌಂಟ್ 400, 5,400 ಮತ್ತೆ ಜಾಯಿಂಟ್ ವೆಂಚರ್ ವಿತ್ ಬೀಸ್ ಅಕೌಂಟ್ 1,360, ಟೋಟಲ್ 6,760 ಆಗುತ್ತೆ. ಸೊ ಈ ಅಮೌಂಟು ಹೇಗೆ ಬರಬೇಕಾಗುತ್ತೆ ಬಿ ಇಂದ. ಸೊ ಬ್ಯಾಂಕ್ ಅಕೌಂಟ್ ಎಟಾರ್ ಟು ಜಾಯಿಂಟ್ ವೆಂಚರ್ ವಿತ್ ಬೀಸ್ ಅಕೌಂಟ್ being settlement made through bank draft. So these are the journal entries. Okay, we already look at the joint venture with b's account. Here by bank account balancing figure 6,076 is shown. To purchase account 5,000, to cash account 400. One transactions only recorded in the books of A, joint venture with b's account. Purchase made by A 5,000 and expenses incurred by A 400, and then one share of profit 1,360. Here in a joint venture with B's account, the transactions affected by the co-venture B is not entered in the joint venture with B's account. ಇಲ್ಲಿ ಯಾವುದೇ ರೀತಿಯಾಗಿರ್ತಕ್ಕಂಥ ಬಿಗೆ ಸಂಬಂಧಪಟ್ಟಿರ್ತಕ್ಕಂತಹ ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಅನ್ನು ನಾವು ಜಾಯಿಂಟ್ ವೆಂಚರ್ ವಿತ್ ಬೀಸ್ ಅಕೌಂಟ್ ನಾವು ಮೆನ್ಷನ್ ಮಾಡಿಲ್ಲ. ಓನ್ಲಿ ಎಗೆ ಸಂಬಂಧಪಟ್ಟಿರ್ತಕ್ಕಂತಹ, ದಟ್ ಮೀನ್ಸ್ ವೆನ್ ಈಚ್ co-venture ಕೀಪ್ ರೆಕಾರ್ಡ್ ಆಫ್ ಇಸ್ ಓನ್ ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಓನ್ಲಿ. ನಾವು ಬಿನ ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಎಲ್ಲ ಬಿಟ್ಟಿದ್ದೀವಿ, ಏನ ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಮಾತ್ರ ನಾವು ಜಾಯಿಂಟ್ ವೆಂಚರ್ ವಿತ್ ಬೀಸ್ ಅಕೌಂಟಲ್ಲಿ ಮಾಡಿದ್ದೀವಿ. ಬಟ್ ಆದರೆ ಮೆಮೊರಂಡಮ್ ಜಾಯಿಂಟ್ ವೆಂಚರ್ ಅಕೌಂಟಲ್ಲಿ ಎ ಮತ್ತು ಬಿ ಇಬ್ಬರಿಗೂ ಸೇರಿರ್ತಕ್ಕಂತಹ ಒಂದು ಅಂಶಗಳನ್ನು ನಾವು ಮೆನ್ಷನ್ ಮಾಡಿದ್ವಿ. ಇಲ್ಲಿ ಮಾಡಲೇಬೇಕಾಗುತ್ತೆ, ಯಾಕಂದರೆ ವಿ ಕ್ಯಾನಾಟ್ ಅಸರ್ಟೈನ್ ದ ಪ್ರಾಫಿಟ್ ಆರ್ ಲಾಸ್ ಆನ್ ಅಕೌಂಟ್ ಆಫ್ ಜಾಯಿಂಟ್ ವೆಂಚರ್ without preparing the memorandum joint venture account. Okay, thank you for watching this video. So have a nice day. Thank you.